Major funding for these broadcasts has been provided by grants from Madison Realty Capital, New York Community Bank, M&T Bank, AmTrust Title, Ariel Property Advisors, Customers Bank, Capital One Bank, Meridian Capital Group. Additional funding has been provided by grants from AVR Realty Company, Bank of America Merrill Lynch, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, Collins Building Services, CPEX Real Estate Services, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handler Real Estate Organization Handro Properties, Hodges Ward Elliott INC, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, John Castamatidis Red Apple Group, Kilroy Architectural Windows, Matone Group, Mercantile Bank, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Group, SJP Properties, Stonehenge NYC, TD Bank, Terra CRG, the Merengoff Family Foundation, the Moynihan Organization, Moynihan Capital Partners, and these friends. Everybody wants to own a piece of New York. How can you own a piece of New York? You can own a piece of New York by buying a co-op or a condominium. So today I've assembled this group of bankers, developers, individuals responsible for the sales of condos and co-ops in the city of New York to tell us the truth of what's really happening in the market. My guests, they include the banker, Joe Pizzutelli, who is the group manager, vice president for commercial real estate at M&T Bank. Eran Polack, who's the CEO of HAP Investments. Jeff Yachmetz, who is the COO for development at Slate Property Group. And last but not least, Robin Schneiderman, who's the senior managing director at Halstead Property Development Marketing. So banker,
yes,
you're the most important here, okay?
Okay.
Because they can't build unless you bank them.
Sure.
So how do you look today at the market, okay? We're in the fall of 2018, you know, the stock market's doing well, people want to buy. How do you look at the condo market?
Yeah, the condo market is, dependent on the location, of course. You're at interest rates that are as high as they've been in the last, call it 7 years. We sit here today in the 10 years at 3.1%. So you have tax reform that didn't help the market, but you still have developers that are very prominent, building in great locations, and people still want to live in the city. So even though there is issues with taxes and interest rates going up, people still, as you say, want to own a piece of New York. So we're excited to finance those projects.
I'm going to call Mr. Schneiderman, since you are the statistician, you have a great pulse on the market. How do you see the market? Is it a tale of two cities? Is it a tale of neighborhoods? Is it a tale based on pricing?
It's a little bit of everything. It really comes down to where you're building. At the end of the day, the best-in-class developments continue to sell in prime residential locations that are supply constrained. So if you can find a development site in a prime residential neighborhood, whether it be Manhattan or the core markets of Brooklyn, you can do very well.
Slate has a number of developments, both as rentals and in condos. How do you see the market today?
Well, we see the market as still challenging in some respects. We see that buyers are being very selective. We find that amenities, locations, these things all play into the equation in the buyer's mind. But we do see transactions happening. We see great neighborhoods, fantastic amenities, fantastic layouts and finishes. And we see those are the markets that the buyers are gravitating towards and ultimately, transacting and purchasing.
And you, since you're developing, right now you have a condo development that you just finished in the Heights.
Yes,
You have the other one where you're building right now,
in 28th Street.
28th Street, which is a Chelsea, Hudson Yards type of neighborhood, if we had to say. You have Jersey City, which you haven't.
That's
and
rental, and we have
You have-
condo in Tribeca.
How do you see the market?
First of all, we did very well in 167 on the Heights. We almost finished selling over there, and we got very good numbers well above the $1,000 per square foot.
But I think what you're just saying to us is that $1,000 a square foot, it's a great price to own a piece of New York, right?
Yes,
Banker also, you would look
Oh,
at
that'd
that
be,
way.
yeah, that's
Yes.
a fantastic price point.
yes, perfect price. But we did above the 1,000. I don't have other condo for sale in the market right now. Like 28 is not on the market yet. Tribeca is not on the market yet. But I do know a few groups of investors that are trying to buy condos. They're not getting great discounts. They cannot, trying to buy 10, 15, 20 condos in a building. It seems that the market is okay.
And you're talking about a group of investors.
Few groups.
Okay, a few groups. Robin, are you seeing groups of investors looking to buy condos in your
Get discount.
in today's
I mean,
market?
we have not, we see people coming to us looking for bulk deals. But the truth of the matter is a lot of the developers aren't at a place that they have to do a bulk deal at this point in time. Does that mean that there may not be some bulk deals done in the end of this year into 2019? I would say probably there will be some of that in certain locations where there's too much inventory and prices are too high.
Relating that question, how does the bank look at a bulk sale?
Well, from a condo inventory standpoint, we love condo inventory. You have
No, that's a condo inventory loan. I'm talking about
on the bulk sale.
on the bulk sale, because the bulk sale may be at a lower price than you projected.
Because you're within the building already, you have the comps within the building. You're assuming that something's
Right.
sold. So
But
it's
It seems that inventory loans, though, are continuing to extend the life cycle of some of these developments.
Look,
and
I'd say there are very few developers who aren't looking to the banks of you and the other community to do an inventory loan. Now, here's my question on an inventory loan. Certain people who have inventory loans, they may want to make some of those units rental. When they change the configuration from a condo to a rental, doesn't that have an effect on lowering the price?
Well, not necessarily. I mean, I think I can answer this from our perspective. The rental market, we're doing a lot more higher end finishes in these rentals, things that you would not necessarily see in the rental market, because we want to be competitive. It's an ultra competitive market, and it's showing in some of our rentals, our higher end rentals. I mean, we are getting very positive feedback from those level of finishes. So when you convert from a condo to a rental, you're almost setting yourself up for success.
So what are the amenities today that we have to put in to sell a unit?
We, a very luxurious lounge, a very luxurious fitness center, and I'm not talking a couple treadmills and some weights. We're talking, Equinox level, high-end equipment. Some of the developments we're looking at going extreme with basketball courts and bowling alleys and golf simulators, and the pool continues
What
to be
about
a
the
draw.
co-working space that there's been discussions of putting the co-working space?
Yeah, it's been in most that we've seen, and I would go one step further to what your question was before on the rental versus for sale, and then for the amenities. We're actually seeing a lot of these apartments that were going to be built as rental apartments, but now they're coming up against these super tall rental buildings that have 30,000 square feet of amenities. So they're actually transitioning now to condo halfway through because they're saying, I can't compete with this 900 unit building that has 30,000 square feet of amenities. I'm a boutique rental. So I have to now convert to condo. This is in markets that are supply constrained,
Right.
like a Long Island City or a downtown Brooklyn, where they're building now what was going to be 100 units of rental, and now it's 100 for sale units, and they don't need the amenity package because it's a boutique for sale type of market. So it depends on how big the project is. You could still see a 30,000 square foot amenity package in a condo deal, but they're prominent in every rental.
Let's talk about markets specifically, okay? We were talking in the green room about the Upper West Side. What's the general feeling about the Upper West Side?
I think it's the strongest market residential in New York City. The overall supply is very tight. Our team is getting ready to launch sales at 200 Amsterdam Avenue, which will be a 51-story tower on the corner of 69th Street, steps from Lincoln Center. It's really the first of its kind in a long time. We'll have roughly 15,000 square feet of amenities over 2 floors, and we have a registration list of up to 300 people right now.
And what is the projected sales price per
So
foot?
it's on a blended basis, it's $3,000 a foot, but the base of the building starts in the low 2,000s a foot, and then once you get up to 600 feet in the air, we're in excess of $4,000 a foot.
What about the downtown Brooklyn where you have 2 condos?
We sold out one, and we are now in development of a second. We absolutely love the downtown Brooklyn market. You know, you just walk around downtown Brooklyn and you can see the activity that's going on there. From a developer standpoint, we find it's very attractive, relatively speaking, for the land basis, but also for the price point. You know, we see a lot of activity in Long Island City, but also a step forward in Astoria. We like that market as well, and we find it very attractive.
Eran?
I think, you know, 28th Street, like, it's a great area, and we're doing the 20,000 square foot of amenities. And again, I think one of the interesting plays in amenities these days is that you almost need to wait to the end to see what you are doing, because there is something new that will come out, some new
You
simulator.
mean a climbing wall?
Climbing wall is like
No.
already, it's history. It's out of fashion.
It's a SoulCycle, or it's an Equinox inside of the development. I mean,
Yes.
you almost
Right. I noticed today I was going to 1010 Winds, and when I was in the car, I noticed that at Ben Shaul's property on Orchard Street, next to Katz's Deli as an amenity, that he has an Equinox gym in that.
Yep.
Yep.
Okay, which is something that Worldwide, one of your clients, had done when they built 74th Street and 2nd Avenue.
Correct.
They put a huge Equinox in.
Yep.
So people want that type of amenity.
in this market climate, you have to separate yourself from your competition. And it's almost, to your point, it's almost like we're trying to one-up each other to sort of, to get that additional little edge with the buyer.
What about the Bushwick and the Ridgewood neighborhoods? I mean, you're the bank.
Yeah.
You know, that's a new neighborhood. It wasn't an area that really had seen anything.
Yeah, and I would say Bushwick, you know, more from a rental market. Bushwick, the up and coming, has kind of gone away from that because people, young individuals moving to New York looking for a deal, are moving to Bushwick. So I would say Bushwick has, in a way, made it already. And we're excited to finance deals out there because of the demand and because of the relative value for renters. Now, from a for sale standpoint, I can't say we've looked at too much in those neighborhoods on the for sale side.
Yeah, it seems like the emerging markets, the Bed-Stuy, the Bushwick, they almost sort of trend towards the rental market first to sort of test the waters, and then the buyers come a little bit later once that neighborhood gets activated.
Now, you know what's interesting? The development that Avalon Bay is doing with Muss. You have in Sheepshead Bay, you have the lower floors being a rental building, and the upper floors are a condominium. Two different developers over there. That was something that happened also with Equity Residential, I think on Park Avenue South, a couple of years ago. How do you see that? How do those sales do in a mixed-use building with the same entrance?
Well, first of all, you're supposed to have two separate entrances. And the challenge to a hybrid product is if more than 50% of the building is rental, it's difficult to get end user financing for mortgages. So we did one years ago at 388 Bridge Street in downtown Brooklyn, and we had to go out to portfolio lenders at the beginning stages. Once we got enough buyers
Right, but
under
388
contract,
Bridge Street was also a very strong developer. I think it was
True. Stoll.
Right, it was Stoll Development,
Yes.
who happens to control a bank also. So
that was helpful.
They had no problem over there.
Yeah.
And it was mixed. It was mostly rental and a small component being condominiums.
The first 33 were rentals, and then 34 to 51 were condos.
What's the thoughts about the Lower East Side, Alphabet City today for condominiums? Mr. Banker?
Yeah, sure. I guess you're pointing more, in my opinion, to a rental market with something like Essex Crossing, where it's a young neighborhood at heart. There's people that still.
But there is a for sale component.
There is, yeah, and I think it will be strong because I think there's going to be strong appreciation in that neighborhood. It's still, to me, when I think of it, and when the bank's looking at the number of transactions we see, it's much more heavily skewed to rental. But it's a strong demand. There's strong demand for that market, and I can see appreciation.
But land prices over there for condo very expensive over there.
It's like $500 a foot, right?
Yeah, even more than that.
Or yeah.
And there is nothing to buy. So
The land market to me is what's most interesting right now. Is that, with certain areas of the city, market is resetting, but the land market still is relatively high. And you're starting to see some land transactions that are hitting the tape over the last 4 to 6 months that are, in my opinion, 10 or 15% too high.
We're talking about Manhattan centric, and we brought up downtown Brooklyn and parts of Clinton Hill and other. But we haven't discussed what everybody is talking about. And you pick up the New York Times and you pick up the real estate rags. What's your thoughts about the Bronx? Have you gone to the Bronx, Joe?
We have not. We've done rental properties and warehouses and retail, of course, in the Bronx is very strong. But no, we have not financed anything condo related in the Bronx.
We have looked at several deals from the affordable standpoint in the Bronx. We find it's attractive. The land basis is attractive for an affordable deal where we can get a lot of the financing.
As they would say, it's not ready for prime time.
We were consulting to Keith Rubenstein prior to him selling the Mott Haven waterfront assemblage to Brookfield.
Yeah.
I think once all of that gets developed by Brookfield, there'll be some opportunity for some condos in Mott Haven, but that's the only area of the Bronx that our team's looked at.
But Riverdale is a beautiful neighborhood. The negative of Riverdale has been the transportation. Nothing else. Not community-wise. It was transportation, that the subway was not nearby. Metro North can help. Transit-oriented developments are the key on that.
And that's why I think as you go further up in Manhattan and you look at what's going on at 125th, the number of assemblages coming together there, and the MTA's stated plan to be able to have that become even more of a transit hub for in and out of the city. I think that while most of these projects you're looking at from a rental today, that could be a strong condo market in the near future.
Yeah. What do you see the north of 125th Street and the condo? Because I was very surprised. I know that Madison had lent money on a project off Park Avenue right directly on the train, a condo development, but it was well priced for like $1,200, $1,300, $1,400.
We're getting ready to launch sales at Vandewater for Savannah, properties on 122nd off Broadway in Morningside Heights.
That's the West Harlem. There are three distinct sections of Harlem. West Harlem, Central Harlem, and East Harlem. And I think you're talking about totally different worlds in the market. You're talking in the same way we were talking before about the Upper West Side. West Harlem is the best part.
Correct, and even better in the Morningside Heights section, close to Columbia. Mm-hmm. But it'll be the first true tall residential luxury condo built above 110th Street, and the pricing that we're looking for is in the mid to high teens per square foot, which some people think is aggressive, but the initial interest is strong, and we're confident with the sales there.
Yeah, and as that market continues to be strong and push further and further north, then the Bronx will eventually become, an attractive play as development just, continues to push the boundaries.
See, I think that where Eran did up in the Heights, I think the Heights has great opportunities. I think it's a great subway ride in. It's maybe 20 minutes on the subway, 25 minutes over there. The neighborhood is getting, new stores, different type of things going on in the neighborhood. And you happen to have some very large employers over there. I mean, you have Columbia Presbyterian is huge in the neighborhood.
Yeah.
And for the doctors, for the nurses, for the technicians, for everybody over there, it has a big opportunity. What about, let's say, other sections which are, let's say, have difficulties on transit, like the Canarsie section, or what's your thoughts about the borough that no one ever talks about, Staten Island?
We have not done any work in Staten Island, so.
Do you have any statistics about Staten Island?
Nope.
Yeah, we have not. We're in the same situation.
Do you know where Staten Island
No one knows that in the school in Israel, Staten Island. I don't know.
We have not looked at Staten Island, and I think traditionally it just gravitates more single family, parcels.
We're talking condos. What about condos in the suburbs? Okay, Jersey City. I mean, is that in your market, or is it the Jersey boys?
Yeah, we do. Certainly, we do stuff Jersey City, Hoboken, and it's being aggressively financed. I would point more so, if you're talking suburbs, to what's going on in New Rochelle right now.
But the New Rochelle right now, most of it's rental.
That's right.
Okay, the New Rochelle developments, and I mean.
But they do have stuff on the water that's been selling fairly well. It numbers, close to 800 a foot.
Right, NRDC has one development, the New Rochelle, which is doing well. But it's, as you say, it's waterfront, it's New Rochelle, it's a relatively trained. What's your thoughts about Yonkers? Any thoughts of anybody in Yonkers?
I think that any place that you can build condos for that you would be able to sell at $1,000 per foot, I would say below $1 million, will be successful in the next 5 to 10 years for few reasons. I think the economy is going to get better, so rents are going to get higher. The fact that the interest rate is going up might put pressure on sections between the consumers that will think like we should take a mortgage now at 4%, 4.5%.
You bring up another interesting
before
point.
It will become 6.
Has the change in the tax law had an effect on the condo sales? Have you seen that? With the limitations, and one of the reasons that Extel's property in Brooklyn Point is doing so well is that you have that 21-year tax abatement. With full taxes, have you seen people walk away because they believe they won't be able to get the deduction?
I mean, I think it changes the equation a little bit. It changes the discussion. But I don't think it's a full deterrent in the sense that people are walking away. I think they're just, they're being a little bit more selective on their purchase.
What about the financial district? We haven't approached that. There's lots of developments being built, and most of them are expensive, right? We're not seeing low price, reasonably priced deals. How do you see the financial district?
Personally, I think there's a lot of supply that's either online or scheduled to come online over the next 12 months, and it's definitely an area that we're watching closely because the dollar per square foot that a lot of these developments need to achieve can be somewhat worrisome.
Yeah, it grew so fast, so quickly. It's something you have to be concerned with. The price points, as is pointed out, it was a hot market for quite some time there, and prices skyrocketed.
but how do you see the availability of funds today for construction projects for condominiums?
You know, for the right sponsor with a very good business plan, you know, loans are closing and you're getting, and more importantly, you're getting interest from a few different lenders at a few different metrics. But again, it all goes back to the right sponsor, the right product, the right neighborhood.
I think it's very strong market. There is, like you say, I'm getting a few very good offers on each deal, each loan, few different metrics, few different structures.
Right.
Banks looking to lend, private equity looking to lend. The market is very active on that side.
For us and our clients, the construction loans seem like they're readily available. It's to us that it's the challenge of finding LP capital or equity partners for our clients. We spend a tremendous amount of time getting our clients' equity partners comfortable with the overall projections of the deal.
So I think in conclusion, it sounds like the condo market for the right product, for the right marketplace, continues to sell, okay? Even though the 10-year treasury is 3.10, which if you look back 52 weeks, over the 52-week, it was as low as 2%. There's money out there, the right property, and so on. And I'd like to thank our banker, Joe, our developer, Eran and Jeff, and our statistician and marketing expert, Robin. See you next week.